Hello, I am Mohammad Musharraf, an expert in blockchain, crypto, and Web3. Decentralized finance, or DeFi, is easily one of the top buzzwords since 2020. But wait, before everything else, let's just try answering what is DeFi. Is DeFi an industry, or is it a technology, or is it just a phrase used by people to sound cool? Before diving deep into this question, I just know that with more than 100 billion US dollars put into the entire DeFi ecosystem, DeFi has grown too big to be ignored. Simply put, DeFi is a parallel system of financial services built using blockchain technology. As we have learned earlier, blockchain is a public ledger that entails the virtues of transparency, decentralization, and democracy. Now, we can also see DeFi as a tool of democracy for the coming generations. Before questioning and how will this occur, let's recollect why the need for DeFi arose. For decades now, we have been using banks for all things money in our lives. I have spare cash, so let me deposit it in a savings account for safekeeping. I need a loan, so I better ask my bank for it. With time, banks have turned into the fulcrums around which our lives revolve. From receiving our salaries to paying the milkman, bank and banking services are a must-have. Now, if banking services were as rosy as they sound, no one would have ventured into anything different, let alone build a parallel system like DeFi. Back to square one, where do banks crack the whip on users? For this, we need to realize that ownership of money is an important yet often overlooked concept in our lives. Our money needs to be ours at all times. If it is blocked by any party, then I'm afraid our money is at the mercy of others. I know I'm sounding too cynical, but hear me out. Losing ownership of money is not mere losing direct control of your money. It is much more than that. Net banking services block due to maintenance issues, withdrawal limit exceeded for the day, NEFT is unavailable on Sundays, aren't these day-to-day occurrences? While these may sound like an exaggeration, the underlying rationale is that we are foregoing our ownership of money. If we study the current financial system that revolves around our banks and other financial institutions, we can clearly understand one thing. We are not owners of money, but mere custodians of it. This ownership of money issue can snowball into serious financial threats because of centralized authorities. For the sake of convenience, we trust banks and similar intermediaries to carry out financial services on our behalf. The cost of this convenience is multifold. Just to add context, a close group of a select few have the authority and power to decide how the money of millions can be utilized. This blatant centralization gives rise to the risk of theft and even corruption. Imagine stealing one key and gaining access to millions of lockers. This is exactly how banks and other financial institutions happen to be. Any hacker or unlawful actor can steal money and data of millions by just penetrating into one bank's database. Centralized finance has also made its way to the crypto world through crypto exchanges such as Binance, Coinbase, and Kraken. Users on these exchanges share their personal information and place their funds in the custody of these organizations. From what we have discussed, it is clear that centralized finance has a unique set of drawbacks that can completely ruin users for no fault of their own. Now imagine the necessity for a decentralized system, one which runs on the lines of transparency and democracy. In the case of DeFi, there is no central exchange or entity through which transactions take place. DeFi allows the users to have complete control over their funds. In DeFi, rather than trusting a top management or authority, you trust algorithms and codes. The shift of trust from people to algorithm is the major difference between CeFi and DeFi. The popular phrase, "not your keys, not your coins," is the best example of how ownership in crypto and DeFi works. Now, I said we trust algorithms to conduct our financial services. How does that work? The answer is smart contracts. They are agreements and contracts residing on a blockchain that self-execute business logic upon the meeting of certain predetermined requirements. Also, the terms of these smart contracts are embedded into the contract's code. Therefore, no one can meddle with it. Using smart contracts, DeFi eliminates the need for several intermediaries in a financial transaction. It also provides more security and transparency as users know exactly about the utilization of their funds and assets, that too without sharing private information. Additionally, DeFi makes the process quicker and easier than CeFi as there is no need for background checks, provision of collateral, etc. Smart contracts can be used to remove paperwork in key areas like legal battles and real estate. Their self-execution puts an end to any sort of under-the-table dealing or other corruption which is rampant in these areas. Now, coming back to DeFi, let us take a look at some use cases of decentralized finance. DeFi also helps in arranging a marketplace for lenders and borrowers to meet. In traditional markets, you could borrow from banks with tons of paperwork and due diligence, or you can borrow from some rich person, which is both risky and expensive as they charge exorbitant interest. Meanwhile, if you want to lend, you either need to have a huge capital upfront to be an accredited lender. If not, you need to take the entire risk on your own shoulders, that is, to recover debts. What this shows is that in traditional finance, lending and borrowing is like an exclusive nightclub. Not everyone is allowed. DeFi throws this narrative out. It includes a community-like sentiment and allows for anyone, literally anyone, to be a part of the lending and borrowing system. DeFi doesn't care where you are from or if you have enough power to recover bad debts. It relies on blockchain for transparent data and smart contracts for automatic execution of interest payments and more. This brings me to the more let's make money side of DeFi, which is staking, lending, and earning interest on them. You can lend your money to fund pools or lock them up, that is, stake them and earn interest on your money. This is a win-win as your logged funds, that is crypto assets, increase liquidity for others while you earn passively. Also, insurance is another industry where DeFi can disrupt the conventional methods. In traditional sense, when someone has to make an insurance claim, there are a lot of steps involved. However, using smart contracts, insurance claims can be automated, making the process hassle-free and paperless. Time and again, we see claims like crypto is the future, Web3 is where the future is, and similar. While all of them are true to an extent, I don't think there is an ideal future other than the one where the potential of DeFi is truly realized and made accessible to all. DeFi, as a complement to CeFi, can disrupt industries, revamp systems, and provide a new lease of life for many. Thank you.